Hello friends, how are you all? Today in this video, I will explain you about different type of secret price action strategies. Dear viewers, if I tell you that you can trade with the help of only raw price chart, then what will you think? You have the same in this video. I will explain you that, how can you trade with the help of only raw price chart? But before going ahead in the video, if you are new to our channel, then hit the like button and subscribe our channel, so that you cannot miss our upcoming videos. Now let's get into the video. Friends, whenever we trade without any indicator, or we trade only with the help of raw price chart, it is called price action trading strategy. I am not saying that you don't use indicators. Even with the help of indicators, we can get more precise and effective trade, but general indicators, such as RSI, moving average, MACD, are based on the price of the stock or assets, and sometimes this indicator may delay to give proper judgment. For example, as you can see here, this indicator is indicating uptrend of the stock at this point, but in reality, the uptrend of the stock has started before some time ago. Even indicators are more important to finalize trade, but if someone want to be less dependent on the indicator, then what should we do? At this time price action strategy comes into the picture. Here I will try to explain some price action trading strategy. It means how to trade only with the help of price of the stock. This is called price action analysis. Our first secret strategy is, small pullbacks gives big moves. Whenever price goes into the uptrend, the price will not be in straight upward line. At some moment, price goes to downward direction. This move of the price from the actual trend is called pullback. Why this type of pullback occurs? It is the sign of selling of stock by the traders for some time of period. Thus, with the help of pullbacks, we can get some information trading of the traders. We can get the measurement of the pullbacks with the help of Fibonacci retracement tool. In the default setting of Fibonacci retracement tool, you will get many price levels, but here we will take 3 levels, 0.382, 0.5, and 0.618. Now you will be having a question that how we will measure the pullbacks with it. For that we will plot Fibonacci between the low level and high level of the move. Now the secret behind is that, when the pullback of the price occur, and it cannot go beyond 0.382 level, then this type of pullback is a small pullback. And as I told you before, small pullback can make big moves. For example, as you can see in the chart, the price has made a strong downward move over here. So, to measure the pullback, we will plot Fibonacci retracement tool. Now you can see, here the pullback did not go above the 0.382 level. It indicates that there can be a strong downtrend ahead. Thus, after a small pullback, there has been a big downward move. Now see our second example, the price is in downward direction, so to measure the pullback, we will plot Fibonacci retracement tool over here. But here the pullback can reach at 0.681 level. Thus this is a big pullback, it is not a small pullback like as before. So, here the downtrend of the stock is formed, but it is not a big move, as the previous move was, it is just a normal move. Second secret strategy is, big body of the candle make impact. Most of the people give more attention to the upper and lower wicks of the candle, but in reality, body of the candle is more important than the wicks. As you can see in the chart, here we have a bullish candle with a big body. When there are more buyers in the market rather than the seller, and seller becomes so weak in front of the buyer, then this type of big bullish candle is formed. At this point, we can say that there is a strong hold of the buyer for this particular instance. In some cases, the low of this candle works as support. It means that when price goes to downward direction, buyers become active again, and the price can jump again from this price level. As you can see, same thing has happened over here, price jumped again from the price level of the low of big bullish candle. We could understand this after getting knowledge about the body of the candle. As you can see here, the body of these candles are small, so no more buying or selling occur. Because traders are not interested in this region, thus market remain in sideways trend. Now our third secret strategy is, the momentum make impact. Momentum means big push or pull in market. Here, we can imagine the next move of the market with the help of angle, made by the price during market movement. It means, we can measure momentum of the stock with the particular angle which is made by the price on the chart. During this we don't require any tool to measure the angle, but we have to conclude that the next move is big or small than the previous move. As you can see in the chart, this move is bigger than the move which was made before. It indicates that the buyers are more active rather than the before. So, the momentum of the price has become more, so the trend may continue in same direction. See another example, here the up move is so small as compared to previous up move, it means buyers are not more active as before they were. So, the market can reverse from here, and as you can see, same thing happened over here. The market could not sustain same position, and there had been downtrend of the stock. Our last secret strategy is that the price has an average recurring trend. It means price has tendency to be near to its average. It cannot go far from its average for long time, and the price tries to reverses again to its average soon. Let us understand it. Here we have a chart of the stock with 50-period EMA, and the stock is in downtrend. As you can see, when price try to go far away from the EMA, instantly reversal occur, and price tend to go near moving average. Thus, price cannot be far from its average for long period of time. It is applicable in uptrend also. You can see here, when the price is trying to go away from the moving average, then in short time, it returns to moving average. Here price cannot be far from its average also. Thus, during uptrend, when the price goes more far from the moving average, we should sell, and our target should be the moving average. Similarly, when the price goes far away from downtrend, we should buy at that candle, and here also our target should be as moving average. That was all. Dear viewers, we have made many videos just to give valuable information to you. You all just enjoy these videos, and in returns, just subscribe our channel so you can get this type of informative video also in future. See you all in next video.